Chapter 14, Book Value per Share, represented by Hipólito Richel, Hamora Jome, and Santos Nicole. Book value per share measures the amount each share would receive assuming the entity is liquidated, and its assets are sold and its liabilities are settled exactly at the amount reported on the statement of financial position. So, ang ibig sabihin, ang book value per share, ito ang amount na ibabayad sa bawat isang share kung sakaling ang corporation ay magsara o mawala. You can also compute book value per share even if it is not yet liquidated because the definition itself says only if the business is liquidated. So the formula for book value per share is book value per share equals total shareholder equity divided by number of shares outstanding. There are two or more classes of shares. There is preference and ordinary share. So for the formula for preference shares, that is book value per share equals preference shareholders equity divided by number of preference shares outstanding. While in the ordinary shares, book value per share equals ordinary shareholders equity divided by number of ordinary shares outstanding. Both preference and ordinary shares allow investors to become part owners of the company. Organizations also prepare to raise capital through them as compared to the debt instruments. However, there are several points of difference between preference and ordinary shares. There are differences from preference shares and ordinary shares. The preference shares are a financial instrument used by companies to raise capital that comes with a dividend option for shareholders, while ordinary shares are also a financial instrument used by companies to raise capital that comes with voting rights for the shareholders. Outstanding shares. So first of all, let's define what is outstanding shares. So, outstanding shares refer to a company's stock currently held by all its shareholders, including share blocks held by institutional investors and restricted share owned by company officers and insiders. Outstanding shares are shown on company's balance sheet under the heading Capital Stock. Outstanding shares pertain to shares that are entitled to dividends. The number of outstanding shares is computed as follows: number of shares issued plus number of shares subscribed, less number of treasury shares, and the total would be the number of shares outstanding. Subscription receivable. For purposes of book value per share computation, subscription receivable is not deducted from total shareholders' equity. This is because in case of corporate liquidation, any update subscription must be collected and used to settle the corporation's obligation to outside creditors. Sa illustration 1, makikita kung paano isolve ang isang one class of shares. So, ang solution ay number of shares issued na 100,000 na makikita sa share capital, 10 at par with 100 shares issued. Number of shares subscribed, 500,000 divided by 10 par equals 50,000. So, a total of 150,000. Less number of treasury shares na 10,000 equals 140,000, and that would be number of shares outstanding. Paano nga ba makukuha ang 17.86 na book value per share? So, total shareholders equity ay 2,300,000 plus subscription receivable na 200,000. So, that would be 2,500,000 divided by 140,000 equals 17.86. Sa illustration 2, pinapakita kung paano ang isolve ang two classes of shares, cumulative preference shares. So, ang requirement is to compute for the book value per share for each class of shares. Solutions. Total shareholders equity na 3,820,000. Preference shareholders equity, aggregate par value na 2 million. Dividends in arrears na 600,000 na makukuha sa 2 million times 10% times 3 years. And that would be 600,000. So, 2 million plus 600,000 is 2,600,000. Ililess siya sa 3,820,000 And the answer would be 1,220,000 at yon ay magiging ordinary shareholders' equity divided by number of ordinary shares outstanding na 100,000 and the answer would be 12.20 na book value per shares sa ordinary shares. Sa illustration 4, pinapakita kung paano isolve ang isang non-cumulative preference shares. So, ang solution ay total shareholders equity na 3,820,000. Preference shareholders equity, aggregate par value na 2 million, dividends for current year only 200,000 and that would be a total of 2,200,000 na ililess sa 3,820,000 and that is 1,620,000 at ito yung magiging ordinary shareholders equity divided by number of ordinary shares outstanding na 100,000 and the answer is 16.20 na book value per share. Illustration 5, number dividends in arrears. So sinasabi dito, preference dividends were paid up to year end, thus there are no dividends in the arrears. So solution, total shareholders equity 3,820,000. Preference shareholders equity, aggregate par value na 2 million. Dividends wala dahil sinabi naman na no dividends in arrears. And that would be 3,820,000 minus 2 million is 1,820,000 na magiging ordinary shareholders equity divided by number of ordinary shares outstanding and that would be 18.20 na book value per share.
Now let us tackle about the earnings per share in chapter 15. Related standard is PAS 33. It is a computation made for ordinary shares. It is a form of profitability ratio which provides a measure of how much profit or loss each ordinary share has earned or incurred during the period. Ang earnings per share ay computation para sa ordinary shares. Dito malalaman at masusukat ang kita or loss ng bawat ordinary shares. No earnings per share is computed for preference shares because preference shares have a fixed return as represented by the dividend rate. Hindi inaalam or kinocompute ang earnings per share kapag ang shares ay preference shares kasi may fixed na return na ito. Pero may exception. Kinocompute ang earnings per share kapag ang preference share ay entitled sa variable return in addition to its fixed return, katulad ng participating preference share. Such preference share are considered special ordinary shares for purposes of earnings per share computation. Pumunta tayo ngayon sa ordinary share. What is ordinary share? It is an equity instrument that is subordinate to all other classes of equity instruments, as according to PAS 33.5. Ang ordinary shares ay tinatawag din na common shares. Tumutulong ito para magkaroon ng profit sa loob ng bawat period after mag-participate ang preference share. May iba't ibang klase din ng ordinary share na tinatawag na alphabet shares like Class A, Class B, ordinary shares. Meron ding super voting shares. Ito yung entitled sa mas maraming voting rights unlike the other shares. Ngayon, ano ang preference share? Preference share is one that has preference over other classes of shares, such as preference over dividends or preference over net assets in cases of liquidation, but typically does not have voting rights. Ang preference share ay tinatawag ding preferred stock or share. Similar din siya sa ordinary shares, pero ang kinaibahan nito ay may option ito sa dividends in case na mag-liquidate ang isang entity or business. Meron ding option ang shareholders na entitled sa preference share na ma-receive ng advance ang dividends at the time na i-announce ng company. Ngayon, may mga types ang earning per share. Ano naman ang mga ito? According to PAS 33, it requires the following two presentations of earning per shares. One is basic earnings per share. The second one is diluted earnings per share. Please note that only the basic earnings per share is presented if the entity does not have dilutive potential ordinary shares. Ibig sabihin, kapag sinabing dilutive, it causes a reduction sa value ng shares dahil sa additional shares ng entity nang hindi nag-i-increase ang asset ng business. Ang basic earning per share ay pinapresent lang kapag hindi nagpapakita ng potensyal na pagbaba sa value ng shares ang isang entity. Basic earning per share is computed as follows. Basic earning per share is equals to profit or loss less preferred dividends over weighted average number of outstanding ordinary shares. Ang profit or loss and preferred dividends, as you can see, are included sa earnings. Profit or loss is net of income tax expense. It includes any exceptional, unusual, or infrequent gains or losses. The second one, preferred dividends are deducted as follows. Please pakitandaan to kasi sinabing if the preference shares are cumulative, ibig sabihin kapag cumulative, 1-year dividend is deducted whether declared or not. Kapag cumulative daw, kahit dineclare or hindi ng entity, 1-year dividend ang ibabawas. Tapos, if the preference shares are non-cumulative, only the dividend declared during the period is deducted. Kapag non-cumulative, kung ano lang yung dineclare, yun lang ang ibabawas. Dividends in arrears, for example, those pertaining to prior periods, are ignored in the computation of earnings per share. The numerator, or the difference between 1 and 2, represents the profit or loss attributable to ordinary shareholders. Lahat ng late payment or sinasabing arrears sa dividends ay ini-ignored sa pagkuha ng earnings per share. Kung ano ang makukuhang amount sa numerator ay iyon ang profit or loss ng shareholders. Bukod dito, minsan hindi pa ito ang total ng profit or loss at na-adjust pa ito dahil may mga additional deductions pa and they are treated like preferred dividends such as discount amortization na dinededuct sa profit or loss, and kapag premium amortization naman, in-add sa profit or loss. Katulad din ng gain or loss. Loss is deducted and gain is added. Ngayon, ang denominator sa formula ng basic earnings per share ay nire-represent naman ito ng shares. The denominator is the weighted average number of shares outstanding. This is computed by applying a time weighting factor to the number of ordinary shares at the beginning of the period and to all issuances and reacquisitions during the period. Time weighting factor is the number of days that the shares are outstanding over the total number of days in the period. Para makuha ang time weighting factor, need mo muna kunin ang number of days na outstanding ang shares and i-divide sa total number ng days sa loob ng period. Outstanding shares are those that are entitled to participate in dividends din. Issued shares plus subscribed shares minus treasury shares. Ang outstanding shares naman ay nakukuha gamit ang formula na IS plus SS minus TS equals outstanding share, or pinaikli lang na issued share plus subscribed share minus treasury share is equals to outstanding shares. Ngayon, magsagot tayo ng example. From illustration 1, basic earnings per share. Cumulative preference shares. Ayan, pwede nyo na muna ito i-stop and basahin ng problem. Okay na? As you can see, we need to compute for the basic earnings per share for cumulative preference share of ABC Corporation. Ito naman yung solution. Magre-refer tayo sa solution na profit or loss less the preferred dividends divided by the weighted average number of outstanding ordinary shares. For the profit or loss, we have 1,200,000 na nakalagay sa given minus preferred dividends na 500,000 times 6% na kinuha rin sa given na preference share. Yung 500,000 ay from 50,000 shares times sa par value na 10 pesos. That would make 500,000 tas minultiply yung 6% kasi yun yung cumulative na given sa preference share. After that, dinivide sa 200,000 na galing sa ordinary shares, which is ito na mismo yung weighted average number of outstanding ordinary shares. To simplify this, 1,200,000 minus 30,000 divided by 200,000, that would be equal to 5.85, which is the total basic earning per share. Ngayon, magbigay pa tayo ng isa. From illustration 2, basic earnings per share pa rin to, pero non-cumulative preference shares na. Dito naman tayo sa non-cumulative preference share. The requirement is the same, but ang case is non-cumulative na ito. Same formula din ang gagamitin pero mas complex ang solution. Ang profit natin is 1 million and less mo yon sa preferred dividends and ang preferred dividends natin is yung nasa cumulative pa rin. Pero i-deduct natin ay yung kung alin lang ang dineclare, which is 25,000 to non-cumulative kasi ang rule is kapag non-cumulative, ang i-deduct lang ay kung ano ang dineclare. So, to simplify it, 1 million profit minus parenthesis 10,000 times 100 pesos per share times 10% minus 25,000 divided by 11,000 na weighted average number of outstanding share is equals to 79.55. That would be the basic earnings per share. Ngayon, try naman natin computing yung participating preference shares. Yung problem dito is ABC Co had the following share capital outstanding all throughout 2021. Yung given is 10% preference shares, 40 pesos par, 50,000 shares issued and outstanding, that would give 2 million preference shares. And sa ordinary naman, ordinary shares, 10 pesos par, 100,000 shares issued and outstanding, that would give 1 million. And may additional information din na the preference shares are non-convertible but are cumulative and fully participating. Sinabi dito na yung preference share is cumulative and fully participating. Ayun na nga. Sinabi sa given na participating yung preference share natin. ABC Co reported profit of 1.2 million for 2021 and declared 800,000 dividends on December 31, 2021. There were no dividends in arrears on December 31, 2020. Requirement, compute for the basic earnings per share. As you can see, medyo komplikado yung solution natin kumpara sa mga naunang illustration. Ngayon, solution na natin. Sa solution, meron tayong dalawang solutions. First is kung paano kumpitin yung basic dividends and participation. Kasi kaya sila kinocompute para makuha natin yung total allocated earnings or yung earnings ng for basic earnings per share. Ngayon, computein muna natin yung basic dividends and participation. The first one is, kailangan muna natin kunin yung profit for the year, which is 1.2 million na given doon sa may additional information natin during 2021. Tapos, yung preference shares for the basic dividends, makukuha lang siya kapag yung 2 million na par, which is given din dun sa may example, sa may problem natin, ito times siya sa 10% na given. That would give 200,000. Tapos yung ordinary shares naman, ang given is 1 million par na nasa problem din, ito times din sa 10%. Tapos, 100,000 yung makukuha natin doon. And then, yung mga nakuha natin for the basic dividends, ima-minus siya doon sa profit for the year. And that would be the excess subject to participation, which is 900,000. 1.2 million minus 200,000 minus 100,000 is equals to 900,000. Ayun yung magiging participation natin. Ngayon, para naman mahati yung participation ng preference shares and ordinary share, kailangan din natin silang computein. For the preference shares ng participation, yung 900,000 ng excess subject to participation is ita times mo doon sa 2 million na preference share. Then, over 3 million. Saan galing yung 3 million? Yung 3 million galing siya doon sa may preference shares plus ordinary shares na 2 million and 1 million. So, pinag-plus lang siya. Kabuuan yun bali ng shares. So, preference shares of 900,000 times 2 million over 3 million equals to 600,000. For the ordinary shares naman, ganun din, 900,000, which is yung excess subject to participation, times 1 million. Yung 1 million kasi sa ordinary shares siya. Divide mo or over sa 3 million din, over ng total shares, is equals to 300,000. So, yung preference shares and ordinary shares, kailangan magtali siya doon sa excess subject to participation kasi nga, hahatiin natin yung participation doon sa dalawang shares. So, balance is 0. Ngayon, nakuha na natin yung basic dividends and participation. Computein naman natin yung basic earnings per share na ng participating preference shares. Sa basic earnings per share, magiging dalawa yung sagot. Basic earning per share ng preference shares and ordinary shares. Yung nakuha nating basic dividend and participation sa dalawang shares is papag-plus lang natin. For preference shares, merong basic dividends na 200,000 and participation of 600,000. That would be equals to 800,000. For the ordinary shares naman, ang basic dividend niya is 100,000 and for the participation, ang nakuha natin kanina is 300,000. Ipag-plus mo, magiging 400,000. Yung total ng dalawa is yung total allocated earnings nga natin. Ngayon, nakuha na natin yung earnings ng preference shares and ordinary shares. Pwede na natin siyang i-divide doon sa may weighted average outstanding shares na ginagamit natin sa formula. Yung weighted average outstanding shares ng preference shares is 50,000. as stated dun sa problem. And sa ordinary shares naman, may 100,000 na nakalagay din dun sa problem. Ngayon, kapag pinag-divide na yung dalawa, yung allocated earnings and weighted average outstanding shares, makukuha na natin yung basic earnings per share ng preference and ordinary shares. Ngayon, itry na natin na yung 800,000 ng preference shares is i-divide sa weighted average outstanding shares na 50,000. Makukuha mo doon is 800,000 divide 50,000 is equals to 16 basic earnings per share ng preference shares. So, ordinary shares naman, ganun din. Yung 400,000 na allocated earnings divide sa weighted average outstanding shares na 100,000 is equals to 4 basic earnings per share ng ordinary shares. Kung matatandaan natin na diniscuss na kapag participating preference shares yung kinocompute natin, ibig sabihin entitled yan sa profit ng excess ng fixed dividend rate nila. Kasi nga 'di ba pag preference shares entitled sila sa dividends. At saka may fixed dividend rate din sila. Ngayon tinatawag sila or tinitreat sila as a special ordinary shares for the purpose of earnings per share. And pinapresent din doon sa financial statement yung earnings per share information ng participating preference shares. Kaya mahalaga siyang computin. Nakuha ba? Sana nakuha. Kung paano computin yung preference shares, yung participating preference shares. And medyo complicated lang siya kumpara dun sa mga nauna. Pero, madali lang naman kapag naintindihan yung concept and yung solution. Ngayon, magsagot ulit tayo ng iba pang problem and iba pang case. Ito, weighted average number of outstanding shares. Entity A reported profit of 1,200,000 in 2021. Entity A had 50,000, 10 pesos par, 6% cumulative preference shares outstanding all throughout 2021. The movements in the number of ordinary shares are as follows. January 1, 2021, ordinary shares outstanding is 180,000. April 1, 2021, shares issued for cash is 30,000. Next is June 30, 2021, subscribed shares is 10,000. October 1, 2021, reacquisition of treasury shares is negative 20,000. Requirement is compute for the basic earnings per share. As you can see, ang given yung preference shares natin, pero yung ordinary shares is naka-breakdown. Ngayon, kukunin natin yung weighted average nitong ordinary shares para makuha yung basic earnings per share. Ang gagawin, ipapag-plus lang natin lahat, then kung ilang months outstanding yung ordinary shares, yun lang yung ipapag-plus, then i-weighted average or kukumputin yung average nun. Gamitin ulit natin yung basic earnings per share formula. Profit or loss less or minus preferred dividends over weighted average number of outstanding ordinary shares. For the profit, we have 1.2 million na naka-indicate doon sa problem or given. Minus preferred dividends na 50,000 times 10 pesos par and times mo ulit sa 6% na naka-indicate doon sa may given natin. Ngayon, kukumpitin na natin yung weighted average number of outstanding ordinary shares. Paano siya kukumpitin? Ganito. Yung number of shares, multiply mo siya kung kailan or yung bilang na outstanding yung shares. Kunwari na doon sa ordinary shares outstanding, January 1, 2021, buong year siya outstanding. So, buo pa rin na 180,000 yung i-record natin. For April 1, 2021, ang number of shares outstanding is 30,000. Ibig sabihin, 9 months from April 1 to December 31, i-divide mo siya sa 12 months kasi isang year. Outstanding yung shares. So, 30,000 times 9 divide 12 months is equals to 22,500. Tapos, for June 30, 2021, 6 months outstanding yung share. So, yung 10,000 na number of shares, ita-times mo sa 6 months na outstanding yung share, divide mo sa 12 months sa isang year, is equals to 5,000. Tapos, yung October 1, 2021 naman, may loss na 20,000 yung number of shares. So, yung number of shares, 20,000 loss times 3 months kasi October siya, then divide sa 12 months in a year. Ang makukuha natin is 5,000 loss. So, nakuha na natin lahat ng value ng months outstanding dun sa ordinary share. Ngayon, para makuha yung weighted average nila, ipapag-plus natin lahat yung nakuha natin. So, we have 180,000 times 22,500 plus 5,000 minus 5,000 is equals to 202,500. Ayun yung weighted average ng number of outstanding ordinary shares. So, may value na tayo. Balik ulit tayo sa formula. Profit or loss less preferred dividends, 1.2 million minus 30,000, yung nakuha natin, i-divide sa weighted average ng outstanding ordinary share na 202,500. Tapos, ang makukuha natin is 5.78 pesos. Yun ang basic earnings per share. Ganun lang siya, kino-compute. Kapag ang naiba lang naman is yung outstanding share kasi naka-breakdown kung ilang months outstanding yung shares. Bali, i-weighted average lang naman yun. Ngayon, pumunta naman tayo sa retrospective adjustments. Ano ba yung retrospective adjustment? Ito yung ina-adjust retrospectively yung earnings per share and weighted average number of ordinary shares sa isang period at sa iba pang mga periods kapag yung mismong ordinary share ay in-issue at hindi nagalaw yung asset. Example nito yung mga share or stock dividend katulad ng capitalization, bonus issue, share split din, split up and split down. Yung bonus element in other issue din katulad ng right issue. Now let us give example. Dito tayo. Share dividends and share split. According sa problem, ang ABC Corporation daw had the following ordinary share transaction in 2021. So, ito yung breakdown ng ordinary share transaction during 2021. On January 1, ordinary shares outstanding is 200,000. On February 1, issued a 10% bonus issue or share dividends, 20,000. On May 1, acquired treasury shares, 12,000. June 1, issued shares in a business combination of 60,000. August 1, issued shares for cash, 30,000. September 1, issued a 2-for-1 share split. December 1, reissued treasury share of 6,000. ABC Co. reported profit of 11,429,000 during the year. Requirement: compute for the basic earnings per share. For the solution, katulad ng ginawa natin sa weighted average number of outstanding share, iba-breakdown din natin yung number of shares and months outstanding para makuha yung weighted average. So, sa January 1, number of shares niya is 200,000 na nasa given. Ito times natin sa 110% times 2. 200,000 kasi beginning of the year siya outstanding, meaning 100% yung record. And bakit 110% yung nandito, hindi 100% lang? Kasi sinabi na kanina na kapag ang susundan is bonus issue or share dividends, which is kabilang sa mga ina-adjust retrospectively, ibig sabihin nagagalaw. Kaya katulad nito, yung February 1, may kita mo na walang number of shares na nakalagay. Kasi yung 10% bonus issue or share dividends ng February 1, ina-assume na na-issue na noong January 1. Ibig sabihin nga, in-adjust noong January 1. So, 110%. Hindi lang 100% yung ita-times natin sa 200,000. Times 2 kasi, katulad din ng share dividends or ng bonus issue, ang share split during September 1, naka-indicate doon sa given na nung September 1, nag-issue ng 2-for-1 share split. Ibig sabihin, ita-times mo ng 2 yung mga nauna sa kanya, yung number of shares. Bali, galing yung times 2 doon sa may share split na naka-indicate sa problem na 2-for-1. So, for January 1, 200k times 110% times 2 is equivalent to 440,000 weighted average. Then, for February 1 nga, dahil nawala na yung bonus issue kasi inassume na nasa January 1 na in-issue yun. Kaya in-adjust na doon. So, yung May 1, nag-acquire ng treasury shares. Kaya 12,000 loss or deducted ng 12,000 to. Kasi, ang rule is kapag treasury shares, dinededuct siya. So, negative 12,000 times 2. Times 2 pa rin kasi nga doon sa share split. Months outstanding. From May 1 to December, ilan yung months na outstanding? 8 months over 12. So, negative 12,000 times 2 times 8 divide 12 is equals to negative 16. Then, for June 1, 60,000 times 2 times 7 over 12 is equals to 70,000. For August 1, issued shares for cash of 30,000 times 2 ulit times 5 divide 12 equals 25,000. September 1, in-adjust na. So, wala na dun. December 1, 6,000 reissued treasury shares times 1 divide 12. Yung December 1, kaya wala na siyang times 2 kasi hindi siya kasama doon sa share split kasi lahat lang ng mga nauuna doon sa share split, yun lang yung binibigyan ng 2-for-1. So, 6,000 times 1 over 12 equals 500. So, para ma-total yung weighted average, papag-add din lahat ng nakuha natin from January 1 to December 1 is mag-equal siya dapat sa 519,500. Yun na yung weighted average number of ordinary shares natin. So, nakuha na ulit natin yung weighted average, magpo-proceed tayo doon sa may basic earnings per share. Computin natin ulit. Profit or loss, less preferred dividends, over weighted average number of outstanding shares, ordinary shares. Profit or loss is equivalent to 11,429,000 as indicated sa problem, divided by 519,500 is equals to 22 basic EPS. Now let us proceed to the second method of computing earnings per share. Nabanggit or na-discuss natin kanina na ang unang method is yung basic earning per share. Ngayon dumako tayo sa second one. It is the diluted earnings per share. It is an entity with dilutive potential ordinary shares. For example, yung complex capital structure, pinapresent yung diluted earnings per share in addition to basic EPS. Pero kapag naman yung isang entity is hindi mahina yung kakayahan or hindi mahina yung potential niya na magkaroon ng ordinary shares, simple capital structure lang. Hindi pinipresent yung diluted earnings per share. Kumbaga, basic earning per share lang yung gagamitin. Potential ordinary share is a financial instrument or other contract that may entitle its holder to ordinary shares. Ang example nito ng potential ordinary share is yung convertible preference shares and convertible bonds. Instrument din to na kino-convert yung issuer's ordinary share na mapasa kanila. Example din ng potential ordinary share is yung options, warrants, and their equivalents. Financial instrument din to na nagbibigay ng right sa holder para mabili or mag-acquire ng ordinary shares. Sa pag-compute ng diluted earnings per share, kino-consider ang potential ordinary share kapag dilutive ito. Paano masasabi kapag ang potential ordinary share is dilutive? It is when exercise, nababawasan yung earnings per share or nag-i-increase yung basic loss per share nila. Ang anti-dilutive potential ordinary shares naman is ini-ignored. Paano naman masasabi kung yung potential ordinary shares are anti-dilutive? Di kabaliktaran ng dilutive. I-increase yung basic earnings ng per share or nagdi-decrease yung basic loss per share. Ngayon, alam na natin kung paano malalaman if yung potential ordinary shares are dilutive or anti-dilutive. Paano naman nalalaman specifically yung example ng potential ordinary share kung dilutive or anti-dilutive? Ang convertible bonds and convertible preference shares are dilutive if their conversion decreases basic EPS or increases in basic loss per share. Meaning to say, yung conversion or yung pag-convert into the issuer's ordinary shares, nagdi-decrease ng basic earning per share or nag-i-increase ng basic loss sa share. Then, yung options, warrants, and their equivalents naman, other instrument din to. Example ng potential ordinary share. Malalaman na dilutive siya if their exercise price is less than the market value of the ordinary shares, making the exercise favorable on the part of the holder. And please note that yung computation ng diluted earnings per share is binabase sa assumption na ang dilutive potential ordinary share were converted or exercised. Like as if the convertible preference shares or convertible bonds have been converted, or as if the options or warrants have been exercised already. Now let us proceed to the convertible preference shares. Isa sa example ng potential ordinary share. Sa pag-compute ng convertible preference shares, ina-assume na-convert na into additional ordinary share yung convertible preference. Walang adjustment din sa profit or loss for any dividends on the convertible preference shares. Ang incremental shares naman is nag-arise from the assumed conversion ng convertible preference shares, which is ina-add naman doon sa denominator na diluted earnings per share formula. Kumbaga, ang incremental shares as stated, as naakald kanina doon sa may formula ng EPS, diluted EPS, ina-add siya sa weighted average ng outstanding ordinary shares. Now let us answer some example for diluted earnings per share convertible preference shares. Entity A had the following capital structure during 2021. Convertible preference shares, 10 pesos par, 6% cumulative, 50,000 shares issued and outstanding na 500,000 kasi 10 pesos par times 50,000 shares issued and outstanding. Ang ordinary shares naman may 10 pesos na par, 200,000 shares issued and outstanding na nag-equivalent naman sa 2 million. Now, each preference share is convertible into 2 ordinary shares. Profit after tax in 2021 is 1,200,000 pesos. Entity A presents 2 earnings per share, basic and diluted, in its 2021 statement of profit or loss. As stated, merong dalawang earnings per share ang present ng Entity A, basic and diluted. So, for basic, kailangan muna natin computein yung basic earning per share. Gamitin natin yung formula sa mga nauna sa basic earning per share. Profit or loss less preferred dividends divide weighted average number of outstanding ordinary shares. For profit or loss, we have profit after tax in 2021 na 1,200,000 pesos. Minus preferred dividends na nakalagay sa convertible preference shares 500,000 times 6% cumulative divided by the weighted average number of outstanding shares ng ordinary, which is 200,000 shares. Pag kinompute yun, 1,200,000 minus 30,000 yung nakuha, divided by 200,000 is equals to 5.85 basic earning per share. Ngayon, paano naman yung diluted earnings per share? Ang diluted earnings per share, tulad ng sabi natin kanina, yung formula is profit or loss plus after tax interest expense on convertible bonds divided by weighted average number of outstanding ordinary shares plus incremental shares. Ang diluted EPS natin, ano yung profit natin ulit? 1,200,000 plus 0. Bakit 0 yung yung after tax interest expense on convertible bonds? Kasi yung potential ordinary shares are convertible preference shares and not convertible bonds. Ayan, pakitandaan kapag convertible preference shares, walang after-tax interest expense, 0. Pero kapag convertible bonds yung ginamit, meron. Ano ulit yung weighted average number of outstanding ordinary shares? 200,000 na nakalagay sa given. Ngayon, yung incremental shares na ginamit natin is 50,000 times 2. Yung 50,000 is galing sa preference share na na-issue and outstanding. Yung times 2 naman is because yung preference share is kinonvert into 2 ordinary shares na naka-note din doon sa problem. So, to compute and simplify that, 1.2 million plus 0 divided by 200,000 plus 50,000 times 2 is equals to 4. Or 1.2 million divided by 300,000 is equals to 4 diluted earnings per share.
Options, warrants, and their equivalents. Options, warrants, and their equivalents are considered in computing for diluted earnings per share only when they are dilutive, such as when their exercise price is less than the average market of the ordinary shares. If the exercise price is less than the average market price of the ordinary shares, the holder would probably exercise the option or warrant because the exercise is favorable on his part. This would result to a dilution in the number of outstanding shares. On the other hand, if the exercise price is more than the average market price of the ordinary shares, the holder would probably not exercise the option or warrant because the exercise is probably unfavorable on his part. Therefore, there would be no dilution. Illustration 1. Options outstanding the entire year. Entity A has profit after tax of 1 million, weighted average outstanding ordinary shares of 100,000, and the following employee stock options outstanding the entire year. Option shares 10,000, exercise price 140, fair value of each share option 10, average market price 200, ending market price at year end 300. So the requirement is compute for the basic and diluted EPS. So to compute basic EPS, yung 1 million na profit minus 0 prepared dividends. I-divide siya dun sa 100,000 share equal 10. For diluted EPS naman, merong formula, profit loss plus after-tax interest expense divided by weighted average shares plus incremental shares. So, 1 million plus 0 divided by 100,000 plus 2,500 incremental shares. So, 1 million divided by 1,200 500. Meron pong formula para sa diluted EPS. Profit loss plus after-tax interest expense divided by weighted average shares plus incremental shares. So, 1 million plus 0 divided by 100,000 plus 2,500 equals 9.76. Illustration 2. Options issued during the year. So, ayan yung problem niya. Ko-compute tayo for the basic and diluted EPS. For the basic EPS, 1 million profit minus 0 prepared dividends divided by 100,000 shares equals 210. For the diluted EPS naman, katulad nung kanina, 1 million plus 0 divided by 100,000 shares plus 1,250 equals 9.88. Illustration 3. Options exercised during the year. So, ayun yung given na problem. Yung hahanapin ulit yung basic EPS and the diluted EPS. For the basic EPS, 1 million profit minus 0 prepared dividends divided by 102,500 shares equals to 9.76. So, for the diluted EPS, 1 million plus 0 divided by 100,000 plus 3,000 plus 2,500 equals 9.48. The basic EPS for the options exercised during the year is 9.76 and the diluted EPS is 9.48. Contracts that may be settled in ordinary shares or cash. Settlement at the entity's option. If the contract can be settled in ordinary shares or in cash at this entity option, it is presumed that the contract will be settled in ordinary shares. The incremental shares are included in diluted EPS computation if the effect is dilutive. And the profit or loss is adjusted for interest expense if the contract is a debt instrument or partly debt and partly equity instrument. Settlement at the holder's purchase option. Purchase options give the purchaser either the right to sell or put option or the right to purchase call option, the object of the option contract. Option purchase by an entity from another entity who has written or created the contract. Purchase options and entity ordinary shares are not included in the calculation of diluted earnings per share because they are anti-dilutive. The put option would be exercised only if the exercise price were higher than the market price, and the call option would be exercised only if the exercise price were lower than the market price. Written option. Option written or created by an entity and sold to a purchaser. Written options require the writer thereof to honor the provisions of the contract if the purchaser exercises its rights on the option contract. Written option also has a higher probability of making money compared to an option buyer. Written put options, contracts that require the entity to repurchase its own shares, such as written put options and forward purchase contracts, are reflected in the calculation of diluted earnings per share if the effect is dilutive. Loss per share. Only the basic loss per share is presented when an entity reports loss for the year. The diluted loss per share is not presented because potential ordinary shares generally decrease the loss per share and therefore are anti-dilutive. However, when potential ordinary share do not decrease the loss per share, a diluted loss per share is nonetheless presented. Example is when an entity reports loss on discontinued operations. So, illustration for loss per share. Ayan, yung question. So, for basic EPS solution, profit or loss less prepared dividends divided by weighted average number of outstanding ordinary shares. Negative 1.2 million kasi loss, reported loss na siya. Minus 500,000 times 6% divided by 200,000 equals to 6.15. So, the prepared dividend is added to the loss because negative and negative result addition. Yan. So, for diluted EPS, profit or loss plus after-tax interest expense on convertible bonds divided by weighted average number of outstanding ordinary share plus incremental shares. So, negative 1.2 m plus 0 divided by 200,000 plus 50,000 times 2 equals to 4. So, the diluted loss per share decreased dahil the basic loss per share or anti-dilutive. Therefore, entity A shall report only the basic loss per share. Multiple potential ordinary shares. When there are two or more potential ordinary shares, they need to be ranked according to their dilutive effect on basic EPS. The most dilutive potential ordinary share is ranked first. The least dilutive is ranked last. The most dilutive potential ordinary share is the one with the least incremental EPS. When computing for the diluted EPS, the potential ordinary shares are considered step by step according to their rankings. If any time the diluted EPS exceeds the basic EPS, the entity discontinues considering further any potential ordinary share, and the lowest amount computed is the amount presented as diluted EPS. Test for dilution. Ayan. So, when testing potential ordinary shares for dilution, the profit figure used as the control number is profit from continuing operations. So, there are additional guidelines in the test for dilution. First, options and warrants are dilutive if the exercise price is less than the average market price. Options and warrants that are in the money are usually regarded as the most dilutive because they result to no incremental EPS. Two convertible bonds are dilutive if their assumed conversions does not increase diluted EPS or does not decrease diluted loss per share. The incremental EPS of a convertible bond is computed as follows. So, sa incremental EPS, ito yung formula niya. After tax interest expense divided by incremental shares from assumed conversions of convertible bonds. So, convertible preference are dilutive if their assumed conversion does not decrease diluted EPS or does not decrease diluted loss per share. The incremental EPS of a convertible preference share is computed as preferred dividends on convertible preference share divided by incremental shares from assumed conversion of convertible PS. Contingently issuable shares are ordinary shares issuable for little or no cash or other consideration upon the satisfaction of specified condition and contingent share agreement. Contingent issuable shares are averaged when the conditions have been satisfied. Partly paid shares. Partly paid shares are treated as fractional shares to the extent of their participation in dividends. Those that are not entitled to dividends are treated as equivalents of warrants or options in the calculation of diluted EPS, meaning the incremental shares are computed using the treasury share method. It should be noted that under the Philippine Corporation Code, subscribed shares are entitled to participate in dividends in full. Accordingly, subscribed shares are treated as fully outstanding in EPS computation. In some countries, however, where partly paid shares are entitled to partial dividends only, the subscribed shares are treated as partly outstanding. For example, 50% paid subscribed shares that are entitled to only 50% dividends are treated as 50% outstanding.